Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our top story. Amendments to the anti-money laundering law will immediately take effect once it is published. That's according to Senate Committee Chairman on Banks and Financial Institutions, Grace Poe. This means the Philippines is on track to meet the February 1 deadline set by the Financial Action Task Force, or the FATF, and is likely to avoid being gray-listed by that task force. Post statements comes after the Senate ratified the bicameral conference committee that ironed out conflicting provisions of the House and Senate versions. Anti-Money Laundering Council Executive Director Attorney Mel George Racela said they have already drafted the implementing rules and regulations while the AMLA amendments were being finalized. Now, once enacted, the measure will give the AMLC the authority to preserve, manage, or dispose of assets that are subjected to a freeze or a preservation order. Now, among other things, the bicameral committee also agreed to include a section on information security and confidentiality. The panel also agreed to increase the threshold on tax crimes to 25 million pesos. That's higher than the 20 million peso proposal by the House and by President Duterte. A new era begins over in the United States with Joe Biden taking the helm as the 46th president of the United States. He began his presidency with an appeal to end America's, quote, uncivil war without direct mention of Donald Trump. Now, he also acknowledged the historical challenges facing the nation, for instance, the worsening coronavirus outbreak, the climate change, systemic inequality, and also the persistent unemployment that they are facing. But rather than offer policy prescriptions, he did keep his remarks towards a call for unity. So he did mention the American democracy had prevailed over the election and now must heal. So let's just take a quick peek at how the markets had closed. This is, of course, just as he was speaking. NASDAQ up by 1 9/10%. The S&P 500 as well enjoying some gains there, 1 4/10%. Now, this is in Europe. That was ahead of the US Open, also with some optimism there, closing in the green. Let's take a quick peek at how Asian markets are reacting. Possibly to that, but possibly to other developments also in the region. You can see a sea of green here. The Topix up by 0.7%. The Nikkei 225 as well up by 0.8%. The only one sitting out this rally seems to be the Kosdaq over in South Korea, but even over in Singapore, the FTSE Straits up by 0.3% this morning. And let's take a quick peek at our own index and whether we are following suit. This happens to happen after we bucked the trend in Asia yesterday. There's a lot of optimism, but it does seem to be the case that we are now slowly catching up. You can see on my terminal here, we're up by 0.1%, but nevertheless not returning to those 7,200 levels we had been enjoying for some days prior. Now, this, according to Phil Stocks, we are bucking the trend in Asia because of pandemic fears and also waning economic and corporate recovery hopes. Recall that we've actually lost 1.8% in just 4 days. That's compared to an 0.8% gain that the MSCI Asia Pacific did have during that period. There's one, however, that is optimistic here, and that is HSBC. They are saying that we may rise to 7,650 by the end of the year. That's as corporate earnings recover. This is according to HSBC's private CIO in Asia. Now, they are neutral, however, on Philippine equities. They're saying that the upside is still capped by expensive valuations. We are still expensive, according to them, compared to markets such as China, Singapore, and South Korea. But they did mention that they are favoring infrastructure, property, and banking stocks. Now, speaking of banks, I'm going to pull that out in the terminal for you. Some good news here. Governor Diokno of the central bank has been discharged now by the hospital. That's amid a steady recovery after a head surgery from an accidental injury there. He's now recuperating at home. He may actually be able to preside as early as next week for the Monetary Board meeting. Nevertheless, a lot on his plate as he gets back to work. We do have more risks on the table. That's according to S&P. They're mentioning that not just the Philippines, but other emerging markets will continue to face credit risks this year. That is as the central bank is likely to lift the regulatory relief measures And also recall that we have had loan moratoriums to help people during this pandemic, and that will be expiring. Now, BSP Deputy Governor Chuchi Fonasher, however, said that they are still deciding when they will be really lifting these relief measures. They're looking into asset quality development, so there's still no timeline on this. Now, according to S&P, the non-performing loans could climb, at least for the ratio, to around 6 to 6.5% by the end of the year. Now, recall that last year, bad loans had already surged 74% to 405 billion pesos. You can see on my terminal here, financials, however, enjoying a bit of a bump up that's up by 0.4%. Now, a couple of banks to be watching out for today. You've got BPI, one of the big gainers here, up by 0.5%. They have just announced that they will be merging their thrift unit, which is BPI Family Savings Bank, with the broader BPI. So they're targeting to complete this merger this year. What that means is that 8.5 million customers of the thrift side will now be able to enjoy the benefits of BPI's group products. I'm going to take a swift move over to Phil Invest here. That's as they have mentioned that their unit cyber zone properties will be planning a REIT IPO. So one to be watching out for here, especially in the property space here. This will be including office buildings. So you've got buildings that are usually leased out to BPOs and multinational companies. And these buildings are located in North Cyber Zone, that's in Alabang, and Philinvest Cyber Zone in Cebu City. Now, last year, those office rentals, at least in the first 9 months of 2020, actually rose by 16% to 2.5 billion pesos. Philinvest land here up by 2.7% amid these this REIT prospects. Now, here to chat with us about all of these developments and more, we have with us Alvin Domingo of Regina Cap. Good morning, Alvin, and welcome back.
Hi, Danny. Good morning. Thanks for having me.
Let's kick off very quickly on the developments in the banking sector again.
hmm
So, a lot of eyes on when are the moratoriums going to be lifted? When
hmm
are these relief measures going to be ending? And should they be actually lifted? How do you balance, how the banks need to earn revenue with the fact that people are still unable to pay their loans?
Yeah, well, first of all, you've had several issues. First of all, in terms of the NPL level, um, I'm not that concerned about it simply because interest rates are so low. And with that, it's very to restructure loans. NPL is a very broad term. If you miss one or two payments, you're already tagged as an NPL. But there's a wide spectrum there of someone who, is temporarily delayed and someone who really has no business. Now, unfortunately, many people may have no business, but since rates are so low and business may recover soon, then we're hopeful that things will be able to restructured. Now, uh, it's a fact that with very very low rates, bank uh, margins, net interest margins are being compressed. No, so it's not just a question of the moratorium, but this squeeze. But I think our banking sector is very adaptive. No, they're trying other business models to give loans. They're using technology. Some are using fintech to better score and enter a market not previously served by them. So the prospects are good.
Okay, when it comes to looking at the different banks here, they've been varying in terms of the provisions that they set aside in
Mhm.
2020, with some being more preemptive than others. Will you say that there are some that have higher downside risks here when these relief measures are lifted?
Um, well, banks with a greater more with more consumer loans are probably of higher risk. No, um, those with a broad franchise. Let's say BDO. BDO is just so broad and so heavily
Mm.
into the consumer space that uh, since typically in this pandemic, those who are harder hit are those smaller businesses. So someone like
Mm.
BPO, who's just so broad and caters to them. But maybe a corporate bank, let's say China Bank Corp, which is more has a very specific niche market, and this sector seems to be more resilient, then you'd expect better. I mean, their core base is not as effective. Although I'm talking in general terms now, these are just
Mhm.
big institutions, so they do cover all these streams. So it's just slight degrees of variation among each bank.
How are you seeing the risk appetites of banks? And what is the catalyst that will let them start lending out and use and tap into this liquidity?
Well, our banking sector has historically been very conservative now. You can just imagine trying to apply for a loan, and they usually make sure there's sufficient security on these loans, and rightfully so, because with, with they are a fiduciary for the depositors, and given the challenges of the legal system, you really need to make sure each one is properly provisioned for. So since they were prudent during more bountiful times, now that times are more lean, I think they're way better, in a way stronger position to weather the storm.
And last question on the banking sector, Alvin. Any impact of the AMLA rules now that have already been approved for us to, of course, not be part of the gray list?
Um, I don't think it's the banks per se, but their clients. The banks have been vigorously trying to minimize money laundering, and they've taken measures since then. Because I believe AMNA would focus more on real estate transactions and gaming. So maybe these industries may have to be more selective with those that do business with. But as to their banking relationships, I think these are pretty secure since the banks already have vigorous measures in place.
Okay, so it's just another safeguard that they have
Hmm.
already put in place. Now let's
Yeah.
move over to the property sector. After an exciting November, so to speak, especially for the stocks here, now several analysts have chimed in saying that 2021 will be worse than 2020. We might see the tenancy rates now palang, having a lag effect and now palang feeling
Yeah.
the pinch. So what's the real deal now, especially since a lot are starting to tap into REITs and there was a lot of excitement on a rebound?
Yeah. Well, um, let's address the source of pessimism now. It's the rollout of the vaccine. So there are issues that might prevent its faster rollout, and because of that, people can't get back to normal, for lack of a better word. And because of that, businesses that were holding out, maybe have a restaurant that was trying to get through December, because December is historically a good month. Those guys may just throw in the towel. So it's very unfortunate. But we should also remember that you can't generalize, no. So while
Mhm.
maybe activity in the CBD is mute, there's a lot of activity outside Manila. You have all of these people buying houses in Punta Fuego, driving to the province. There's an enhanced attraction to a healthier lifestyle. I think the pandemic forced many people to re-examine their goals and priorities. So so if you look at the REIT, um, you it would be prudent to follow those that have adapted to this change in the market. The market is not dead; it's just moved elsewhere, no, and you have to just follow it.
Okay. One on that market, you've got the closure of Makati Shangri-La, an icon
Mm.
after 20, 27, 28 years. How would that affect the prospects of the sector, especially when it comes to the tourism rebound?
Yeah. So it's consistent with my earlier point of shifting in priorities. So it's the Shangri-La Makati that closed, but the Shangri-La Mactan and the
Mhm.
Shangri-La Boracay are open. So maybe there's less attraction to the CBD where Makati Shangri-La is, but there is still hope for the tourism sector outside, especially with these sort of pocket areas for travel, where Makati, Shangri-La Boracay and Shangri-La Mactan are. So again, it's unfortunate that the CBD will not do so well. But then economic activity, I mean, tragic as the deaths may have been, it's not that large, no? So
Okay.
people have decided, to move out, to re-examine their lives. So it's really just finding these new hotspots of activity.
Okay, so choose your battles for Shangri-La there. Finally, the FLI REIT. How excited are you about that? They're betting basically on the BPO sector continuing its growth. They did see an increase in revenues last year.
Yes, well, BPO is a very good driver for growth. It seems that we're still competitive there. We may have lost or our Pogo business may have been diminished, but prospects are still bright there. And with increased offshoring, they should benefit.
Okay, so one exciting thing to be watching out for there possibly when it comes to the property space. So still some silver linings there with Philinvest land up by 1.8% to 1 peso and 14 centavos. Thank you so much for those insights. That was Alvin Limlingan of Regina.
My pleasure. Have a good day.
Have a good day. Okay, guys, I'm checking in on the biggest headlines. We are keeping our eyes on the Trade Department revised its export targets for this year and 2022. That is to reflect the extent of the impact of the coronavirus pandemic and the sluggish global demand. Trade Secretary Mon Lopez said the revised targets will have to be lower than the original figures given when export levels were projected to reach over $130 billion by 2022. Now, in the revised targets, the country is expected to hit $105 billion by 2022, but still growing from $91.7 billion this year. He explains, given the height of the lockdown and the pandemic in 2020, estimated export decline for last year is at negative 13.5%. Still, the Trade Department expects the proposed economic reform legislations, as well as infrastructure and digitalization programs to boost the country's export capacities. Poultry imports from parts of Ireland have been temporarily banned. Now, this comes after Dublin reported outbreaks of the bird flu. Agriculture Secretary William Dar suspended the entry of domestic and wild birds and their products from County Wicklow, that's in Ireland, starting January 15th. The ban also freezes processing, evaluation, and issuance of sanitary import clearances for these commodities. Dar said Ireland first confirmed the bird flu outbreaks in the country last December 12th. However, in a separate memo, the Agriculture Department also lifted the import ban on poultry products from Chesterfield County over in California. That's after confirming that the area is now free from bird flu. That's a first look into the business day. Today's Thursday, January 21, 2021. Catch Business World live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.